Hello traders, so in this lesson, you're going to learn how to combine the order block with Wyckoff Schematic for better entries, entry confirmation, and directional buys. So here we have a higher time frame order block, and what we're looking for is how does the lower time frame react to this higher time frame order block? And this would be the lower time frame representation. So what do we have here? We have an instant rejection. And if you ask yourself, how often does this actually happen? How often does price on the lower time frame touch the higher time frame order block and instantly reject? Very rarely. And why is that? An instant lower time frame reaction from a higher time frame point of interest would be too easy. If that was the case, everybody would make money in the market because of how quick and simple it would be. In reality, price doesn't just reject from a higher time frame order block instantly. In reality, what occurs is a lower time frame accumulation at a higher time frame order block. The purpose of this is to confuse traders and have them overthink their position. So this is where Wyckoff comes in. So there is two types of schematics, basic and advanced, and it's up to you as a trader to pick which one you want to use and which one you can use on a consistent basis. But we're going to cover both of them. Let's start off with basic. So as you can see here, you have a bullish trend, but at the end here, you're starting to see a little bit more selling pressure in comparison to the previous sell-offs. This would be your buying climax. This is where the buying comes to an end. And now that pull away from your buying climax would be your AR. This would be your automatic rally. This is the market showing intent that in fact it does want to sell off. Now what do you have here? A rejection from your buying climax. Outside of your schematic laws, this would be a rejection from an extreme supply. So this would be your test. Your test is a rejection from an extreme zone, whether it's premium or discount. So now price completely takes out your test and your buying climax, but comes back inside of the range. This would be a sweep. This would be a liquidity grab. And why is that? Because all the traders that sold at your test, their stop losses will be right above, and the breakout traders need to be punished as well. This would be your purge. Your purge is your stop line. So now, once price completely breaks structure and comes back inside of the range and rejects again, this would be your RTO. What is your RTO? Return to origin. Price coming back to the origin. Now, post your origin, price breaks structure and comes back inside of the new range. This would be your sign of weakness. So now let's talk about the complex schematic. And before you proceed, please make sure you like the video and leave a comment. This will help us continue making these free lessons. So here you have your PSY. Your PSY is your preliminary supply, and this is an aggressive move that usually happens in or around your pair price, which is in the middle of the range prior to price approaching your higher time frame point of interest. And this is usually a clear indicator of increase in volume. And similar to your basic schematic, this would be your buying climax. This would be your automatic rally. And now this would be your test. Why is it a test? Because it's a rejection from an extreme. And this would all happen in your first phase. So this would be phase A. And what happened here? Here you have your minor sign of weakness. Why is this a minor sign of weakness? Because for one, it occurs in phase B, which is not your last phase. And this is simply an intent. So a minor sign of weakness plays the same role the AR plays in your basic schematic. And what do you have here? You have your UT. UT is your up thrust. This is a traditional term for purge. The only difference is this occurs in your second phase, which is your phase B. And now what do you have? You have price completely taking out your UT and your BC, and this would be your UTAD. This would be your up thrust after distribution. So after price distributed in your phase B, now price absorbs the liquidity and closes back inside of the range. This would be your last point of supply, which is really similar to your RTO, but price returning back. So any pullback from here would be your last point of supply. And now the price broke your minor sign of weakness. This would now be your major sign of weakness. Now that we're past the intent, now this is an actual confirmation that the character is changing. So now let's talk about climax. Identifying a climax is the first step of anticipating an accumulation, which is your Wyckoff schematic. The climax is a pivotal point because that's when price reaches exhaustion, indicating the earliest sign of a trend change. This does not mean that price will instantly change character, but it does mean that price will start the process of changing character. Let's talk about anticipating the climax. Leading to the climax, price is in a strong trend. When price breaks the trend, that's one of the earliest signs of an incoming climax. Another sign is the volume rejection from the alleged climax, which leads to the automatic rally. In simple words, the size of the move in comparison to the previous moves in the similar direction. So let's combine. This is your higher time frame order block, and this is your lower time frame delivery. So why is this your buying climax? Look at the automatic rally. Look at the sell move away in comparison to the previous moves. So look at this sell move in comparison to these two previous moves. It's much greater. So this is an early sign of a climax. So let's talk about time frames. If you're looking at your weekly order block as your higher time frame point of interest, your schematic should be on the daily or the 16-hour time frame. If you're looking at the daily order block, you're looking at the 1 hour to the 15-minute Wyckoff Schematic. If you're looking at the 4-hour or the 1 hour order block, you're looking at the 1 minute or the 5 minute for your Wyckoff Schematic. So right now we're on the weekly time frame and we are looking for a higher time frame order block. So in this case, we are looking at this order block right here. Why are we looking at this order block? Because to validate an order block, we are looking at peaks. We're looking at peak premium or peak discount. And in this case, we're looking at a peak premium because you have a break of structure. Since you have a break of structure, you're anticipating price now to be bearish. So any retracement back should be to an extreme. So now let's go to the 16-hour time frame to look for our Wyckoff Schematic. So what do we have here? We have a rejection. Now, like I said previously, you want to reference this rejection to confirm this climax with your previous two swings. So if you look at this swing, yes, this swing is greater than this sell-off. But if you look at this swing right here, this is a very similar size of swing. So we cannot validate this sell-off as a climax. We must wait. And now you have a significant sell-off, much greater than the previous two swings. So now what are we referencing? We're referencing this sell-off and this sell-off. So the selling pressure here is much greater than anything we encountered recently. So now we can confirm this as our selling climax. And a significant pull away will be our automatic rally. So what are we waiting for now? We're looking for a test. Where do we anticipate a test to occur? At the extreme of this level. So an easy way to do it would be to pull out your fib, swing low, swing high, and mark up the top quarter. So this is one way to do it. Another way to do it, and this is a tip for scalpers, is to target an order block. So we have an order block right here. So you're looking for a test right here. And you have a rejection right here. So now you have your test. So now that you have your test, what are you looking for next? You're looking for a purge. You're looking for price to take out these levels and absorb the liquidity above your selling climax. And now you have your sweep and price came back inside of the range. What would have been the range would have been this swing high and this swing low. So now you have your purge. Now, what are you looking for next? You're looking for a return to origin. How you go about your return to origin, you look for where the rejection was, which was your order block at your selling climax, where the test rejected from, and you stretch it out. So now when price retests this level, this would be your RTO. Now this would be your RTO. And you have your return to origin. So this was your RTO. And here you have a break of structure. And you have your sign of weakness. Now, any retracement back inside of this range, you're looking for your last point of support. Now, there's variables. You could look at a retracement to the nearest swing, which could be a retracement to an extreme here, or another option you could do is you pull out your swing high and swing low and mark up fair price. We need to confirm price coming back inside of the range. So let's see. Okay, so this will be the swing low. So now you are either targeting this level here or as your final level of supply will be in fair price. So right here. Make this golden, make this pretty. The price attempted to sell off right here. Was reaching for a higher level of internal liquidity. Using that level as demand. And a complete sell-off. Let's look at another example. So here we are on a daily time frame. Let's mark up our extreme order block. Again, like we said, we're looking for validated order blocks, which is peaks. So what I mean is at the top of your range, at the top of the extreme, if you were looking at a order block, you would be looking for an order block right here, and so on, so on. If you're in this swing, you would look at this order block. If you're in this swing, you would look at this order block and the top of the top. So the final order block that has not been mitigated. So this is it. And here you have a minor inducement, but we're not really paying that much attention to that. Now we're looking at our 1 hour reaction. So what do we have here? We don't have a significant sell-off. We must continue. Okay, now we have a significant sell-off, which is much greater than the previous two swings. So we can mark this as our buying climax. Were we looking for a test? We're looking for a test right here. Right where this order block is, overlapping with our extreme zone. Okay, perfect. So we have test. We got our. What are we anticipating next is a stop hunt. So what are we waiting for now? Now that we have our purge, and price came back inside the range, we're looking for price to break this previous supply zone. Once price breaks this previous supply zone, we can look for a return to origin. Okay, so now price broke the supply zone. Actually, let me make this old area lighter. You can actually see what's going on. We can stretch this level out. Now we're looking for our return to origin. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and let us know what lesson you guys want next.